All right, let's unpack this. Welcome to the deep dive. We're the place you come to cut through all that noise and get the insights that actually matter. Forget scrolling endlessly. We aim to give you the signal.
That's the idea.
And today we're taking a deep dive into a really, really pivotal week for Bitcoin. We're talking July 21st to July 27th, 2025, Indian Standard Time. And this week, I mean, it wasn't just busy, it felt like seismic shifts.
Yeah, it really did.
We saw major moves in U.S. crypto regulation, a frankly audacious corporate play, and some really interesting institutional investment trends bubbling up.
Exactly. So our mission today really is to pull out the most important bits, those nuggets of knowledge from the key reports and the financial news that came out that specific week. Think of this as, your shortcut, so you can be genuinely well-informed on where Bitcoin's been heading lately without drowning in data yourself.
Absolutely. And we're setting the stage today by focusing on three sort of critical areas that really dominated the conversation. First up, we'll dissect some pretty groundbreaking U.S. legislation, stuff that's hitting stablecoins but also redefining broader regulatory oversight.
Right.
Then we're shifting focus to a corporate giant that basically just doubled down on Bitcoin again, which, raises some questions.
Oh, definitely.
And finally, we'll dig into the latest on institutional money flows into Bitcoin products, especially those spot ETFs everyone keeps watching.
And, the goal here, it isn't just listing facts. We really want to help you understand what these developments mean. What are the implications? Why are they so significant for, the whole digital asset landscape?
Okay, good.
So shall we jump into those regulatory shifts first? They certainly shook things up.
Yeah, sounds like a plan. Because this is where it gets really interesting, I think. Reports from that week, they're highlighting two critical pieces of U.S. legislation that saw real movement. First, the Genius Act. That's the big stablecoin bill. It was actually signed into law just before our focus week on July 18th.
That's right.
This feels like a genuine pivot point for stablecoins. What do you think is the biggest, maybe unforeseen consequence we might see from this? First federal framework for dollar-backed stablecoins, I mean.
Well, what's truly fascinating isn't just the framework, it's the timing. Like you said, just before this packed week. This law, it brings some much-needed clarity to a part of the crypto market that's been under, intense scrutiny, especially around financial stability concerns. And then almost simultaneously, you have the Clarity Act.
Right, the SEC, FTC one.
Yep, exactly. That one aims to finally definitively split crypto oversight between the SEC and the CFTC. And it cleared the House on July 17th. Taken together, it really suggests a concerted effort, maybe even bipartisan, to define clear roles and cut down on that regulatory ambiguity that's plagued this space for so long.
Okay, so clarity seems to be the theme. How did the markets react? Reports were saying things popped a bit. Bitcoin was holding near its July 14th all-time high. So it seems like this regulatory movement brought some positive feeling, but is that, a real shift in sentiment or just short-term relief, especially considering there's still a long way to go for full integration?
That's a really sharp question.
Right.
The immediate reaction, yes, it was positive. It signaled a degree of certainty the market always craves. But looking bigger picture, clearer rules are often seen as a prerequisite for more serious institutional adoption and, mainstream acceptance, too.
Makes sense.
It signals a move towards integration, not, outright bans. And that, psychologically and structurally, is a huge step for the industry, regardless of the finer details.
And it's not just the regulators signaling this, is it? We saw a huge corporate player basically scream that same sentiment, MicroStrategy. I mean, is anyone surprised? They're almost synonymous with corporate Bitcoin buys now. They just doubled down.
Yeah, it's Mochekle. They really did.
Reports confirmed they added a staggering 6,220 Bitcoin. That was between July 14th and 20th, just leading into our focus week. This pushes their total holdings to, around 607,770 Bitcoin.
Approximately, yes.
At that level, you almost wonder if Michael Saylor even sleeps or if he's just plotting world domination via sats.
Chuckles. Certainly a staggering commitment. Their cost basis for the whole pile now sits around $43.6 billion US dollars. The average price per Bitcoin is about $71,756 for them.
Wow.
But what's maybe even more telling, and where the deeper insight might be, is how they paid for this latest batch. They actually upsized a new preferred stock deal to $2.8 billion, and they explicitly stated it was to fuel more Bitcoin purchases.
Right. So this isn't just seeing a dip in buying?
No, exactly. It's not opportunistic in that simple sense. It's a strategically engineered move using capital markets to keep accumulating.
So, okay, MicroStrategy's move, it clearly signals conviction. But is it just them being bullish, or does it set a new kind of benchmark for corporate treasuries, even at these higher prices? Like, what's the ripple effect here? How might other public companies look at Bitcoin now?
I think it's more than just confidence. It's almost a blueprint. MicroStrategy isn't just saying we believe in Bitcoin. They're actively demonstrating how a publicly traded company can financially engineer its balance sheet to hold a non-traditional asset like Bitcoin and do it aggressively.
Right. It challenges that old idea that only, say, cash-rich tech giants could afford to dabble in crypto.
Precisely. It could potentially open the door, or at least the thought process, for a much wider range of companies to consider similar strategies. Their continued, almost relentless accumulation, it really speaks volumes about their long-term belief, even when some analysts might call it risky. That's the really impactful part, I think.
Okay, so we have regulation firming up, corporate conviction on display. Let's shift to the institutional money flow, because that picture seems a bit more nuanced than maybe the big headlines suggest. CoinShares analysis, for instance, showed an all-time high weekly inflow to digital asset funds overall, US $4.39 billion.
Yeah, a huge number.
A record. And of that, about US $2.2 billion went specifically into Bitcoin products.
Sounds overwhelmingly positive, right?
On the surface, absolutely. A record inflow for the whole digital asset fund space.
Yeah.
That's undeniably bullish. However, when you zoom in, specifically on the US spot Bitcoin ETFs, which, let's face it, have been a major focus for institutions, the picture for that specific week, the one ending July 25th, was, well, a bit more modest.
Modest how?
They did keep their positive streak going, which was impressive, 7 weeks straight. That's fantastic news in itself.
Okay.
But the actual net inflow for that specific week, it was only about US $72 million.
72 million. Okay, that's a big difference from the overall 2.2 billion flowing into Bitcoin products generally.
So if it wasn't overwhelmingly pouring into the US spot ETFs that week, where did the rest of that capital go? Reports did mention BlackRock's iBeat leading daily inflows late in the week, so there was some ETF strength.
Right, and that raises a really important question. It challenges the maybe overly simple idea that all institutional money just flows through these specific US ETF products.
Yeah.
The data suggests that while there's definitely record institutional interest in digital assets broadly, and Bitcoin specifically,
Yeah.
the flows into those US spot ETFs might be entering a more, let's say, mature phase?
Yeah.
Maybe less explosive than the initial launch weeks? Or it could mean that significant Bitcoin investment is happening through other avenues, maybe direct purchases outside the ETF wrapper, or through non-US regulated products, perhaps.
Understanding that distinction is pretty key, actually. It helps us gauge the true depth and, importantly, the diversification of institutional adoption, not just the headline number. Wow, okay, what an action-packed week, seriously. So let's try and tie all these threads together. That week, July 21st to 27th, 2025, IST, we saw real progress on U.S. crypto regulation. The Genius Act, nailing down a federal stablecoin framework. The Clarity Act, starting to define SEC versus CFTC lanes. That signals regulatory maturation, right?
Definitely. And amidst that growing clarity, you had MicroStrategy showing just unwavering conviction again, adding another 6,220 Bitcoin, hitting that huge total, around 607,770 BTC. And crucially, backed by a big capital raise specifically for more buying. That highlights serious corporate confidence.
And then, finally, the institutional side. While digital asset funds overall saw record inflows, $4.39 billion, with $2.2 billion into Bitcoin products, specifically the U.S. spot BTC ETFs, had a more, let's say, nuanced week, netting about $72 million, even while keeping that positive streak alive. It shows institutional engagement is evolving.
Absolutely. These things, they might seem like separate events, regulation here, a corporate buy there, fund flows over here. But during that week, July 21-27, they really showed a powerful convergence. You've got regulatory maturation clearing the path. You've got strong corporate conviction setting, aggressive examples, and you have this evolving institutional interest in Bitcoin that's clearly deeper and more diverse than maybe just ETF flows alone would suggest.
Yeah, well put. And understanding these movements, it really feels crucial for anyone interested in where finance and tech are heading. It just powerfully demonstrates how digital assets are increasingly weaving into the established system, moving away from the fringes.
Which brings us to maybe a final provocative thought for you, the listener, to chew on. Given this emerging regulatory clarity we discussed and the very significant corporate and institutional money now clearly flowing into Bitcoin, how might this fundamentally reshape the balance of power? and innovation, between traditional finance and this decentralized digital asset space in the coming years.
What assumptions that we used to hold about crypto's future, maybe its Wild West status or its isolation from legacy systems, might need a serious rethink now based on these trends? Something to consider.